Hello everyone, good evening. A very warm welcome to the BRBL CAIIB December 2024 exam marathon sessions. And today we are going to start with the module C. We are going to finish the module C in this particular video. Here in the English medium channel for the BRBL, we are going to discuss the most important MCQs covering each and every topic, each and every important topic of the module C. This is the third marathon class of this particular session. So very quickly join the session. I hope you would have watched the previous two modules, module A and module B, and I hope you would have revised as well. Problem related to PDF would have been solved on the Telegram channel. I have shared all the PDFs that you can download from. So now let us start with the first question from module C for our BRBL preparation. Okay. The first question, various acts in the module C are covered, like we have the RBI Integrated Ombudsman Act, then we have the Micro, Small and Medium Enterprises Development Act, right? These are the various debt recovery, Legal Services Authority Act that are covered in Module C. Okay. So the question one says, under which clause of the Banking Regulation Act 1949 was the Banking Ombudsman Scheme 2006 introduced? The most basic question that can be asked, under which clause of the Banking Regulation Act the Banking Ombudsman Scheme was introduced? Under clause 18, clause 35A, clause 45L or clause 51? I hope this is a very basic question and you would have already answered it correctly. The correct answer is option B, that is clause 35A. The Banking Ombudsman Scheme was a scheme which became operative from January 1, 2006 for providing an expeditious and extensive forum for bank customers for resolution of complaints. This was introduced under clause 35A of the Banking Regulation Act. It was also amended or updated from time to time, and the latest amendment being from July 1st, 2017. So here we can see three particular information that have been provided under the same question. First, the Banking Ombudsman Scheme in 2006, January 1, it was launched for the resolution of complaints, for the grievance redressal. Then under 35A clause of the Banking Regulation Act, and it was updated most recently in 2017. Next question, who is the appellate authority as defined in this scheme? In the scheme of the Ombudsman Act, who is the appellate authority? Whether it is the any advocate that is appointed by the complainant or a person appointed by the bank, the executive director in charge or the ombudsman, who is appointed as the appellate authority under the particular scheme? Yes, the correct answer to this question is option C, that is the executive director in charge. There are various definitions that are given under this act. For example, the appellate authority means the executive director in charge of the department of the Reserve Bank that is administering the scheme. Okay? Appellate authority means the executive director in charge. Then the appellate authority secretariat means the department in the Reserve Bank which is administering the scheme. So it is the name of the department. The appellate authority secretariat. The authorized representative will be a person other than an advocate that is duly appointed and authorized in writing to represent the complainant in the proceedings before the ombudsman. Representative. In any case that is to be presented before the ombudsman, in those proceedings the complainant will be represented by the authorized representative. And then we have the award, which means the award that is passed by the ombudsman in accordance with the scheme. So various definitions are given under the scheme of the various terms. So the appellate authority here means the executive director in charge of the Department of Reserve Bank that is administering the scheme. Then next question, which acts and directions are referred to for defining the terms not defined in the scheme? So apart from the definitions given in the scheme that we just discussed, various other terms are defined. But these are defined in the different acts. And these acts are accepted. These definitions are accepted under the scheme. Apart from the award, the complaint, deficiency in service, deputy ombudsman, regulated entity, all of these definitions are given. But apart from that also, certain acts, they contain the definitions. So the Reserve Bank of India Act 1934, the Banking Regulation Act 1949, Payment and Settlement Systems Act 2007, and the RBI directions. Which of the following are correct? 1, 2 and 3, 2, 3 and 4, 1 and 3 only, or all of the above contain the definitions not defined under the Ombudsman Act. The correct answer is option D, all of the above. The definitions of the major terms appearing in the scheme is provided under the clause 3 subsection 1. However, the clause 3 subsection 2 stipulates that words and expressions used and not defined in the scheme. There are some expressions or words that are used in the scheme, but the definition is not given in the third clause. They are defined in the various acts like the RBI Act, the Banking Regulation Act, the Payment and Settlement, all directions given by RBI. They will be used or they will be referred to and they will have the same meaning that have been assigned to them under the different acts. Alright, so all of these acts, the definitions that are contained in them of the terms that are used in the scheme will be used. The same definition will be used in this scheme. I hope this is clear. Next question. Who is responsible for the staffing and cost of the office of the Ombudsman and the CRPC? So under this act, the Ombudsman office is created. Also the CRPC, which is a centralized receipt and processing center. I will write the full form here. The centralized receipt and processing center. So who is responsible for the staffing and cost that is incurred? Whether the banks involved, the government, the Reserve Bank of India, or the customers who are filing the complaints. Who need to undertake the costs of the office of the Ombudsman and the CRPC? The correct answer is option C, that is the Reserve Bank of India, RBI. This is given in clause 6, that setting up of the centralized receipt and processing center for processing of the customer complaints relevant to the scheme has to be done, and the RBI shall establish this CRPC at any place as may be decided by it to receive the complaint. So the RBI has the authority. They can decide in which place they are going to set up the CRPC, and also their cost of setting up their staffing will be undertaken by RBI. So all the complaints under the scheme that are made online, all the complaints that are made through the email and the physical form, they shall be addressed and sent to the place where the CRPC has been established. So whether in the physical format or email or online on the portal, all of these complaints will be processed at the CRPC, provided that the complaints are received directly in any of the offices for further action. Also, the staffing will be done or will be the responsibility of the RBI. Alright, so the correct answer is option C. It is the responsibility of RBI. Clear? Next, and according to the clause 10 subsection 1, which of the following situations can result in a complaint being not maintainable? So the complaints can be declared as non-maintainable, which is given under clause 10. So, which of the following situations can result in such a scenario? General grievances against management or executors of a regulated entity. Basically, the CRPC will not take the complaint further, they will not process it further. Complaints about the banking fees, disputes in which action is initiated by a regulated entity in compliance with the statutory orders, services outside the regulatory purview. So, if the grievances are against the management or executive of a regulated entity, will they be processed or will they be declared as non-maintainable? Or relating to the banking fees, or if the duties are discharged according to the statutory orders, but there are disputes regarding that, or according to the services that are completely outside the regulatory purview of the Reserve Bank. So 1, 2 and 3, 2, 3 and 4, 1, 3 and 4, or 1, 2 and 4. Which of the following will be declared as non-maintainable? Try to answer this question. So the correct answer here will be option C, that is 1, 3 and 4. So only the complaints about the banking fees can result being non-maintainable. So it contains the circumstances where the complaint will become non-maintainable. The matters are commercial judgment or commercial decision of a regulated entity, a dispute between a vendor and a regulated entity regarding the outsourcing contract, grievances that are not addressed to the ombudsman directly, general grievances against management or executives of a regulated entity, disputes in which the action is initiated by a regulated entity in compliance with the orders of a statutory law, serves not within the regulatory purview of the Reserve Bank, disputes between regulated entities, or disputes involving the employer-employee relationship. So the complaints about the banking fees cannot be declared as non-maintainable. Rest all of these can be declared as non-maintainable, and these are given under the clause 10 subsection 1 of the scheme. Alright, so you need to remember all of these because a question like this can be asked in the examination. Next, what actions are taken with the remaining complaints after non-maintainable ones are separated? So once the non-maintainable cases that we just discussed are separated, what will be the processing format or what will be the action that will be taken of the remaining complaints or the complaints that we can say are accepted according to clause 12? So it is given in clause 12. These are assigned to the offices of the ombudsman for further examination. They are forwarded to the Centralized Receipt and Processing Center, the CRPC. A copy of the complaint is forwarded to the regulated entity against whom the complaint is filed, directed to submit a written version to the regulated entity. So what will be the next step? What will be the next action taken with the complaints that are maintainable or that are accepted under the clause 12? Which of the following are correct? A and B, sorry, 1 and 2, 1, 2 and 3, 1, 3 and 4, or 2, 3 and 4. I've included many statement type questions. Why? Because we are seeing these type of questions being asked in the exam. Alright? So that you get used to the difficulty level, you need to solve these questions. So here the correct answer is option C, that is 1, 3 and 4. 1, 3 and 4. So according to clause 12, complaints which are in the nature of offering suggestions or seeking guidance or explanation shall not be treated as valid complaints. So if the complaints are seeking advice, if they're not actually related to any grievance of the customer, then they shall not be treated as valid and they shall be closed accordingly with a suitable communication to the complainant. Although communication will be provided at why the complaint has been rejected. Then the complaints which are non-maintainable under clause 10 shall be separated, and again a suitable communication will be provided to the complainant. Then the remaining complaints will be assigned to the offices of the ombudsman for further examination. A copy of the complaint shall also be forwarded to the regulated entity and with direct submission in the written version. So it will not be forwarded. Actually, CRPC is doing this process, right? They are doing this maintainable, non-maintainable, valid, invalid complaints. Next step will be forwarding it to the ombudsman or the regulated entity or directed for the submission of a written version. So the correct answer is 1, 3 and 4. You need to remember these clauses. I will provide a PDF in which, in the final marathon, in which we will see the different clauses under the act, the sections, the penalties, everything in one place. Alright, so clause 12 deals with the complaints of the, or we can say the actions of the accepted complaints. Then, what is the maximum compensation amount that the ombudsman can award according to clause 15 subsection 4? So under the clause 15 subsection 4, the maximum amount, we just said what is an award? Award which is made by the ombudsman after all the proceedings have been done. So what is the maximum compensation? Rupees 20 lakh or the consequential loss suffered, whichever is lower. The total financial loss that is suffered by the complainant. Rupees 10 lakh or the amount involved in the dispute plus the consequential loss. Consequential loss also includes the mental health, how it has affected the mental health of the person, of the complainant. So what is the maximum compensation that the ombudsman can award for the complainant? The correct answer here is option A, that is rupees 20 lakh or consequential loss suffered, whichever is lower. So the award shall contain the direction, if any, to the regulated entity for specific performance of its obligation. If the ombudsman finds that the regulated entity has not performed its duties, they may say that quickly, on a priority basis, you need to perform the obligations. Let's say if it is related to the locker vault or release of any security accordingly. Then in addition to or otherwise the amount which is to be paid by the regulated entity by the way of compensation for the loss that is suffered, along with the duties, the obligations, they also need to pay the compensation, notwithstanding anything contained in the subclause 3. So the ombudsman shall not have the power to pass an award directly payment by the way of compensation. The ombudsman will tell the regulated entity to make the compensation. They will not directly pass the compensation. They will not make the payment. And here an amount which is more than the consequential loss by the complainant or rupees 20, whichever is lower. Right? And this will be the compensation, so it will be exclusive of the amount that is involved in the dispute. So apart from the dispute, this compensation will be awarded by the ombudsman. So the correct answer is option A. Remember this, rupees 20 lakh or the consequential loss, whichever is lower. Next, under clause 17, in which scenarios can a regulated entity prefer an appeal before the appellate authority? Now, if the regulated entity is not satisfied with the decision that was taken by the ombudsman, they can final appeal. So, in which cases can they do so? Award under clause 15(1) of B, closure of the complaint under clauses 16(2)(c) to 16(2)(f), general grievances against the bank policies, complaints about the service quality. So in which of the following scenarios can the banks prefer an appeal before the appellate authority? And we just saw the definition of the appellate authority. I hope you remember that. So whether 1 or 2, 2 and 3, 3 and 4, or 1 and 4. Answer this question. Which of the following options is correct? A, B, C or D? So here the correct answer will be option A, that is 1 and 2. Both the regulated entity and the complainant has the right to prefer an appeal for the procedure for which is given in clause 17 of the scheme. So here in the question itself, the clause 17 is mentioned. It states that there shall not be any right of appeal to a regulated entity for an award that is issued for not furnishing of documents or information under clause 15(1)(a). Right? They cannot file an appeal where the decision is taken for the non-furnishing of documents. However, the regulated entity that is aggrieved by an award under clause 15B or closure of a complaint. Within 30 days, they can prefer an appeal before the appellate authority. So they can make an appeal under award of clause 15(1)(b) or closure of the complaint under clause 16 to C to F. Alright, so the appeals can be made in these particular cases, and it is given under clause 17. So within 30 days they have to make. So I think this information is enough. Next, which of the following changes are made to the MSME definition in the Gazette notification of 1st in 2020? In 2020, a new definition of the MSMEs were given. Some changes were made in the definition, like the differentiation of enterprises, manufacturing, and services was removed, and now only enterprises is used. Then earlier only one criteria was used, like the investment in plant and machinery was used. Now, along with the investment in plant and machinery, turnover criteria is also used starting from 2020, and all the investments limits have been increased. So out of these four statements, which of the following are correct? The investment limit for the medium enterprises has been increased to 50 crore. The turnover limit for the medium enterprises has been increased to 250 crore. The investment limit for the small units increased to 1 crore, and the turnover limit for the micro units increased to 5 crore. So for the micro, small, medium enterprises, definitions have changed. Yes, both investment and turnover criteria has increased, so that to include more industries or enterprises in the criteria of MSMEs, so that priority sector lending can be enhanced. And the correct definitions are option A, that is 1 and 2 only. So here the definitions are given. After 14 years since the MSME Development Act came into existence in 2006, a revision MSME definition was announced in the Atmanirbhar Bharat package in 2020. So you need to remember this. In 2020, the definition was given in the Atmanirbhar Bharat package. Here, the coverage of the micro manufacturing and services units was increased to 1 crore. So for the micro, it was less than 1 crore for the investment and turnover of 5 crore. The limit of small, I will write it here, small, the investment was increased to 10 crore and the turnover limit of 50 crore. So 1 and 5, 10 and 50. And for the medium, it was increased to 20 crore and the turnover was 100 crore. Alright. Further revision was made and the medium enterprises was increased. This was made 50 crore and the turnover was made 250 crore. This is the definition that was changed. So the definition was revised. Investment and turnover both was increased. So the correct answer is 1 and 2. Next, which entities are specifically included under the definition of supplier according to the scheme? So according to the Act, the Micro, Small and Medium Enterprises Act, what is the definition of supplier? So various definitions are given: the advisory committee, the goods, the buyer, the day of deemed acceptance. Similarly, supplier's definition is also given. The National Small Industries Corporation, the Small Industries Development Corporation of a state or a union territory, large multinational corporations, cooperative societies engaged in selling goods produced by micro or small enterprises. Which of the following are included in the definition of supplier? Take 10 seconds and answer this question. Yes. So here the correct answer will be option C. Yes, option C. 1, 2, and 4. Supplier will mean a micro or small enterprise which has filed a memorandum with the authority that is referred to in subsection 1 of section 8. It includes the National Small Industries Corporation, registered under the Companies Act of 1956, the Small Industries Development Corporation of a state or union territory, again under the Companies Act of 1956, and any company, cooperative society, trust or body that is registered or constituted under any law which was in the time being in force, and it is engaged in selling goods that are produced by micro or small enterprises. So this is obvious. The company or the cooperative society in the micro or small enterprises will be included. Apart from that, the National Small Industries Corporation and the Small Industries Development Corporation will also be included. The large multinational corporation will not be included as per the definition of supplier according to the MSMED Act. Alright, so the correct answer is 1, 2 and 4. Next, where is the head office of the National Board for Micro and Small Medium Enterprises located? Very basic but very important question. Where is the head office of the National Board for MSME located? Whether it is in Mumbai, Bangalore, Kolkata, or in Delhi. In which state is the head office located? It is located in Delhi. Right? It is located in Delhi. Okay, so apart from this, other informations like what is contained in the chapter 1 of the act, what is contained in the chapter 2 of the act, this is given to us. Go through this one. Next, what does the NBMSME advise the central government on? The National Bureau on MSME, what does it supply the government or what does it advise the government on? What is the responsibility of the National Board for Micro, Small and Medium Enterprises? The use of fund or funds constituted under Section 12, the policies for large enterprises, the environmental regulations, enhancing the competitiveness of micro, small and medium enterprises. So the NBMSME under the Section 3 of the Chapter 2, it is mentioned that it will be set up in Delhi, will be the head office. Basically, it will consist of 47 members, and out of that, 18 will be the ex officio members. They will have different responsibilities like examining the factors affecting the promotion and development of MSMEs, recommendations according to the matters that are referred to the board, advising the central government on various issues. So here the correct answer will be option C, that is 1 and 4 only, on how the central government can use the funds constituted under section 12 and how they can enhance the competitiveness of the micro, small and medium enterprises. So here the functions are given: making recommendations, advising the central government, examining the factors that are going to affect the promotion and development of the MSMEs. So for this reason, the National Board for MSME has been set up with its headquarter in Delhi. Next, what types of enterprises are mentioned in section 8 subsection 1C for filing a memorandum? So which enterprises can file a memorandum under section 8.1? The micro enterprises providing services, the small enterprises selling goods, medium enterprises engaged in the manufacture or production of goods, large multinational corporations. So a memorandum by the micro, small or medium enterprise is required to be filed under section 8. So any person who wants to or who intends to establish a micro, small enterprise or a medium enterprise, they shall do so. So the here correct answer will be option C, that is medium enterprises engaged in the manufacture of production of goods. So we have been specifically asked about the section 8.1. So any person who intends to establish a micro small enterprises, a medium enterprise engaged in providing or rendering of services at his discretion, a medium enterprise that is engaged in the manufacture or production of goods pertaining to any industry, or the central government under subsection 1 or the state government are specified. Why option A is incorrect? Because here it is written micro enterprise providing services or small enterprise selling goods. The first one says at his discretion. It does not matter whether they are providing services or they're selling goods, right? They have the discretion to choose their own business. And obviously, large multinational corporations are not eligible here. So the correct answer is option C. Next, on what basis is the compound interest calculated if the buyer fails to make payment as stipulated in section 16? Fixed interest rate, 3 times the bank rate notified by the Reserve Bank, twice the bank rate notified by the Reserve Bank, or the interest rate that is agreed upon in the contract. So if the buyer fails to make a payment, then how much compound interest they have to pay? And it is mentioned in section 16 of the Act. So which of the following is correct? So this is in case of the delayed payment. Delayed payment. So the liability is with the buyer to make the payment under section 15 or under section 16, date from which and the rate at which the interest is payable is given in section 16. So here the correct answer will be option B. It is 3 times the bank rate that is notified by the Reserve Bank. So chapter 5 talks about the issues of delayed payments by the buyers of the product or the services from MSMEs. Here the liability of the buyer to make the payment is given in section 15. Where the supplier supplies the goods or renders any service, the buyer shall make payment before the date agreed upon them. So they have to make a payment. However, if there is no agreed date, then before the appointed day, no case that the period agreed upon between the supplier and the buyer shall exceed 45 days from the day of acceptance. So from the day of acceptance where the buyer, they accept the goods or the services supplied by the supplier, they have to make the payment. If they do not, it will be considered as a delay. Then the date from which and the rate at which the interest is payable, this is given under section 16. So the buyer shall, notwithstanding anything contained in the agreement, they will be liable to pay compound interest with monthly rest to the supplier on the amount from the appointed day as the case may be, and this will be 3 times the bank rate that is notified by the Reserve Bank. So the bank rate 3 times of that will be paid as the compound interest by the buyer in case they make a delay in the payment. Here you need to very quickly connect it to the TREDS platform. How the TREDS platform is solving this problem of delayed payments. Alright, so the correct answer is option B. Next question. What is the range of the number of members in the Micro and Small Enterprise Facilitation Council? So this is given in section 21, the Micro and Small Enterprise Facilitation Council. How many members are to be there? 1 to 2 members, 2 to 4 members, 3 to 5 or 5 to 7? How many members are to be there in the Micro and Small Enterprise Facilitation Council? The correct answer is option C, that is 3 to 5 members. So this Micro and Small Enterprise Facilitation Council is to be set up under which section? Under 20 of the Act, and they are to be established by the state government through notification at places where exercising such jurisdiction is required. So regarding the composition of the council, which is detailed in section 21, there are to be not less than 3 members and not more than 5 members, which are to be appointed from the directors of industries, or they should not be below the rank of such director in the Department of State Government. One or more office bearers from the associations of micro and small industry, one or more representatives of the banks and financial institutions that are providing finance to the small enterprises, and one or more persons having special knowledge in the field of industry, finance, law, or trade. So a question can also be asked from this explanation that is given. Like the members that are to be made part of the facilitation council, what are going to be their qualification, or which of the following are not eligible to be the member of the facilitation council. So you need to remember these qualifications. Next, what is the minimum fine for the second or subsequent conviction of contravening the provisions of subsection 1 of section 8 or subsection 2 of section 26? So if any buyer who is required to get the annual accounts but they fail to furnish the information, then how does it work? What will be the penalty, or what disclosures have to be made? What will be the penalty? Rupees 500, rupees 1000, rupees 5000, or rupees 10,000? Which of the following will be correct? Okay, so the correct answer here will be option B, that is rupees 1000. So in terms of section 27, whoever intentionally contravenes or attempts to contravene any of the provisions contained in section 1, then they shall be punishable. If they are making this this conviction is done for the first time, then fine extends up to rupees 1000. And if in the case of second or subsequent conviction, then the fine shall not be less than rupees 1000, but it can exceed up to rupees 10,000. So here the question is asking us the minimum fine in the case of second conviction. So in the case of second conviction, the minimum fine is rupees 1000, maximum is 10,000, right? And if a buyer contravenes in the provisions under section 22, then the fine shall not be less than rupees 10,000. So first conviction 1000, second conviction more than 1000, it shall not be less than 1000, and more than that it shall be not less than rupees 10,000. Next, which activities are included in the legal framework introduced by the SARFAESI Act of 2002? SARFAESI Act, again very important, in the previous session questions were asked more than one from the SARFAESI Act. So which of the following are included? The securitization of financial assets, the reconstruction of financial assets, recognition of any interest that is created in the security for due repayment of a loan, or mandatory court intervention for the realization of money due. I'm giving you 10 seconds to answer this question. Which of the following are included in the legal framework? Alright, so now let us see the correct answer. Correct answer is option B, that is 1 and 3 only. So the SARFAESI Act includes securitization of the financial assets, reconstruction of the financial assets, recognition of any interest created in the security for the due payment, power to enforce such security for the realization of money, enabling provisions for the setting up of a central registry for the purpose of registration. All right. So these will be included in the legal framework. Next question. What was the Supreme Court's ruling in the Mardia Chemicals versus Union of India regarding Section 17(2) of the SARFAESI Act? Whenever any case has been mentioned, then it becomes important, like what was the order that was given, what was the decision that was taken. So it upheld that the act is constitutionally valid except for the part section 17(2). It declared the entire act unconstitutional It ruled that the borrowers should always pay 75% of the claimed amount, or it declared that the lenders have absolute rights over the securities. What was the ruling of the Supreme Court in this particular case? And this is related to the section 17(2) of the SARFAESI Act. Okay, so the correct answer is option A, that is, it held the act as constitutionally valid. So, in this particular case, a three-member bench of the Supreme Court declared this act as constitutionally valid. This section laid down that whenever the lender intends to take action of taking the possession of a security asset, the borrower can file an appeal to the DRT only after disposing 75% of the amount that is claimed by the lender. That is, the borrower, after an award has been made for the securitization, they can make a claim, they can make an appeal only after they have paid the 75% of the amount that is claimed by the lender. And then the Supreme Court declared that this condition of deposit of the claim amount as unreasonable, oppressive, and arbitrary and violative of the Article 14 of the Constitution, the right to equality. Alright, so Supreme Court held that it is violative of our fundamental right, Article 14, and thus it said that we should amend the Act deleting the condition of the pre-deposit of the amount for filing the appeal under section 17. So the whole act was not repealed. It was upheld. It was said that the act is fine, but we need to amend the section 17, which says that 75% of the amount should be paid before the borrower can make the appeal. Alright, so this is correct, option A. Then what is the retrospective application of the SARFAESI Act? SARFAESI Act is applied retrospectively. So it applies to the loans created after the Act came into operation. It does not apply to the any of the existing loans before the Act was passed. It exempts all the financial assistance that is provided before 2002. It applies to the loans and securities created prior to the Act coming into operation. So regarding the Act, the loans that were created before the act came in 2002, what is the retrospective application of the SARFAESI Act? Can we use the act there? So the correct answer is option D, that it does apply to the loans and securities that are created prior to the act coming into operation. Act also extends to the whole of India, including Jammu and Kashmir, also to the housing finance companies, relating to the enforcement of security interest. There is an obligation on the part of the borrowers to repay the loan, and if they are unable to repay, then the securities can be sold without intervention of the court or tribunal. And it has the retrospective application, thus it does apply for the loans and securities created prior to the act coming into operation. So this is the retrospective application, that the banks can resort to securitization even if the loan was made before the act came into force. All right. Next, within how many days can an aggrieved person file an appeal to the DRAT, according to the SARFAESI Act? So, the aggrieved person, they have the chance, the borrower, they can make an appeal to the Debt Recovery Appellate Tribunal, but they have to do so within a certain time limit. So what is the time limit? Whether it is 30 days, 45 days, 60 days, or 90 days. So the aggrieved person can make an appeal. I think this question is very direct, very simple. The correct answer is option B, that is 45 days. So any person who is aggrieved by the order that is passed by the DRT. First the DRT will pass the order. If the person is aggrieved, they are not satisfied by the order, then they can make an appeal to the authority, that is the Debts Recovery Appellate Tribunal. This is to be done within 45 days from the date on which a copy of the order has been passed. And this will be done only after the tribunal is received the depositing of 50% of the claim amount. Later on, it can be reduced to 25% if stated by DRAT. Alright? So these tribunals are constituted by the central government for various states as per the provision of Recovery of Debts Due to Bank and Financial Institution Act 1993. This also is an important information. So remember these. The recovery tribunals, DRTs or DRATs are formed under the Recovery of Debts Due to Banks and Financial Institutions Act 1993. So the correct answer is within 45 days the appeal can be made. Next, what conditions must be met by an asset reconstruction company and ARC to operate under the SARFAESI Act? So if any company wants to act as the ARC, what conditions should be met by them? They must have a net owned fund of not less than rupees 2 crore. They must obtain a certificate of registration from the Reserve Bank. They must be approved by the local municipality and they must provide regular financial reports to the public. We know the functions, the organization of the asset reconstruction company, and there are certain conditions that they need to fulfill before they can operate under the SARFAESI Act. And these conditions are A and B. They must have a net owned fund of not less than 2 crore and they should obtain a certificate of registration. So ARC is the acquisition, asset reconstruction is the acquisition by the ARC of any right or interest of any bank or financial institution for the realization. So ARC is going to do what? They are going to acquire the security or the asset for the purpose of realization or securitization. So it is a company that is registered with RBI under section 3 for the purpose of carrying out the business of asset reconstruction or securitization, the takeover of loans or advances from the banks or financial institutions for the purpose of recovery. Alright, so no ARC shall commence or carry on the business without obtaining a certificate of registration and their net owned funds should not be less than 2 crore as given by RBI. So A and B is correct. These are the conditions that if they are they meet, they can operate for the securitization and recovery of loans. Next, how does the registration system operate according to the SARFAESI Act? Now, if more than one loans are there from one person that are to be reconstructed, they are to be securitized. So how does the registration system work for the different loans? It is based on the alphabetical order. They are selected randomly. First in time to register gets priority, that is on a priority basis, or it is based on the loan amount. So how do the accounts get registered according to the SARFAESI Act? The correct answer is that they are done first in time to register gets priority. So the central registry means the registering office that is set up under the central government. They're going to conduct all the transactions of asset securitization, reconstruction, creation of security interest. The registration system will operate on a priority registration basis, first come, first serve, right? So the first in time to register gets priority over the person doing registration at a later time. The registrar will also give or serve the purpose of maintaining the credit information. Here, the central government has issued the securitization and reconstruction of financial assets and enforcement of security interest rules. The registry became operational on 31st March 2011. So basically what we need to remember here is that if more than one cases come to for registration to the register that is created by the central government, the central registry, then they will register on a priority basis. The first come, first serve criteria will work. Next, to which case is the RDD-BFI Act 1993 applicable? Cases involving debts of more than 20 lakhs, debts less than 10 lakhs, personal loans or credit card disputes. the regulation of securitization and reconstruction of financial assets. So which of the following are correct? The cases involving debts of 20 lakhs or more, cases involving debts of less than 10 lakh, cases involving personal loans, or cases involving credit card dispute. I hope it is very clear. The correct answer is the cases involving debts of 20 lakh or more. So the Recovery of Debts Due to the Banks and Financial Institutions Act, which came in 1993, provides for the establishment of the Debt Recovery Tribunal and the original jurisdiction. DRTs have the original jurisdiction, and the Debts Recovery Appellate Tribunal that have the appellate jurisdiction. The appeals against the orders of the DRT are made to the DRAT for expedition or adjudication of the recovery of debts. So herein, the act is applicable to the cases where the amount of the debt due to any bank is more than 20 lakh. It is 20 lakh or more. At present, there are 39 DRTs and 5 DRATs functional across the countries. E-DRT project has also been implemented. This project aims at bringing improved access, e-filing, efficiency and transparency, e-payment, causal list generation and case information. All right. So basically all the cases involving rupees 20 lakh or more will be dealt under the Recovery of Debts Due to Banks and Financial Institutions Act, under which the DRT and DRAT have been established. Then, what conditions must an ARC fulfill to carry on business of securitization or asset reconstruction as per the amendment? We have already seen that if a company wants to function as an ARC, what are the conditions? Herein, an amendment was made in the Act of 2016. According to that, what conditions have to be met? They need to obtain a certificate of registration from the RBI. They should have a net owned fund of not less than rupees 2 crore, register with the Ministry of Corporate Affairs, have a partnership with the nationalized bank. We have already answered a similar question, so the correct answer is A and B. Same thing. The question is asking us the same thing. What are the conditions that the ARC need to fulfill? They don't need registration with the Minister of Corporate Affairs but RBI, and there's no necessity of having a partnership with the nationalized banks. Alright, so the correct answer is option 4, A and B only. Next, what is one of the reasons for the cancellation of the registration under the first category? So, when will the company be cancelled? If it fails to maintain the accounts as per the RBI directions, or they fail to submit quarterly reports to RBI, they fail to recruit qualified personnel, or they fail to secure new business deals. When will their registration be declared cancelled? Yes, so the correct answer is that the cancellation of registration will be made if there is a they fail to maintain the accounts as per the RBI directions. So the Act has provided that the cancellation of registration may be in two categories. First, if they cease to carry on the business of securitization, if they're not able to carry out the business for which they were established, that is securitization or reconstruction, or they fail to comply with the RBI guidelines, they fail to maintain records, they carry on or hold any investment from a qualified institutional buyer, they fail to give accounts and documents to RBI for inspection, right? And second category is done with an opportunity to comply with the defaults other than the above. All right. So, yes, the correct answer is if they fail to maintain the accounts as per RBI directions, then their registration will be cancelled. Next, which of the following are listed as measures for the asset reconstruction under Section 9? Under Section 9 of the Act, certain measures are given as to how we can undertake the reconstruction. Proper management of the business of the borrower, liquidation of all of the borrower's assets, enforcement of security interest in accordance with the provision of the Act, taking possession of the secured assets. Which of the following measures are allowed to be taken when we are trying to recover or reconstruct the debts or the security? So the correct answer is option D, A, C and D. Liquidation of all the borrower's assets is not done. So without prejudice to the provisions contained in any other law for the time being in force, the ARC can provide for any one or more of the measures. They can undertake proper management of the business of the borrower by change or takeover of the management, or they can undertake the sale or lease of a part or whole of the business of the borrower. They can undertake rescheduling of the payment of debts. They can enforce the security interest in accordance with the Act, settlement of dues that are payable by the borrower, or they can take possession of the secured assets in accordance with the provision of the Act. So there are various methods that the ARC can take for the reconstruction, but they cannot undertake the liquidity of all of the borrower's assets. So the correct answer is A, C and D. Then, what are the types of the disputes that must be settled by arbitration or conciliation? Now, there are certain disputes which do not require the reconstruction or securitization. They can be settled by arbitration or reconciliation. So, which are these disputes? Disputes related to the securitization, disputes related to the reconstruction, disputes related to non-payment of any amount due or interest, disputes involving obligators or borrowers. So which of the following can be settled by arbitration or conciliation? The correct answer is 1, A, B and C. Arbitration, mediation, conciliation, these are the various methods. So if there is any dispute between the bank or the financial institution and the ARC as well as the qualified buyers related to the securitization or reconstruction or non-payment of the amount, they are to be settled by conciliation or arbitration given in the Arbitration and Conciliation Act of 1996. So the dispute may be against any of the three parties. It might be between the bank and the ARC, or the ARC and the qualified buyer, or the bank and the qualified buyer. Right? So arbitration and conciliation can be used. Next, what action does a secured creditor or asset reconstruction company take when it takes over the management of the borrower's business? So this is one of the way of reconstruction or securitization that can be done by ARC taking over the business. So what action is taken? They issue a public apology, they publish a notice in the newspapers, they seek approval of the shareholders, or they organize a public press conference. Which of the following action can be taken? The action that is taken by the ARC is that they publish a notice in the newspaper. So when the secured creditor or the ARC takes over the management, they may publish a notice in the newspaper in the English language, also in the Indian language, where the principal office of the borrower is situated. This will be done if the borrower is a company as defined in the Companies Act. In any other case, to be the administrator of the business of the borrower. Then once this notice is published in the English newspaper or the local newspaper, then the directors of the company or the person holding any office or direction and control or the borrower, they immediately before the publication of the notice, this office shall be deemed to have been vacated. If the notice has been published in the newspaper, then it will be deemed that they have vacated. They have already vacated their offices. Alright. So the correct answer is option B, that they can publish a notice in the newspapers. Moving on. Which transactions must be registered with the central registrar under section 23? Which type of transactions under the act are said to have to be registered under the central registrar? The securitization of financial assets, the asset reconstruction, creation of security interest, persons or personal saving accounts. So which transactions have to be registered? Whether A, B and C, B, C and D, B and D or A and C. The correct answer here is option A, that is A, B and C. A, B and C. Personal saving account transactions are not to be registered. I think it was a very basic question. So as per section 23 of the SARFAESI Act, the particulars of every transaction of securitization, asset reconstruction or creation of security interest will be filed with the central registrar. Right? So the central government, they may require the registration of the transaction. They may prescribe the forms for the registration for the different types of security interest. These are the different components of the particular section 23. So they need to make a registration of the securitization, asset reconstruction and creation of security interest. Next, what is required for a court to take cognizance of an offence under the SARFAESI Act? So, in which case the court will take cognizance of an offence under the SARFAESI Act? If it is a verbal complaint, if the complaint is in writing made by an authorized officer, if it is a public petition, or a complaint by any government employee. So in which case the court will take cognizance? In which case the court will be involved? The correct answer is if a complaint is made by the authorized officer. Although section 30 says that no court shall take cognizance of any offence punishable under section 27 in relation to the non-compliance with the provision of section 23, 24, 25 or 29, but this can be done. There is an exception only when the complaint writing is made by the officer of the central registry or any officer that is authorized by the central registrar or the reserve bank. Then only the case will be uh, or the complaint will be taken into cognizance by the court. So when the complaint is made in writing, otherwise the court cannot take cognizance of any offence that is punishable under the act. Only when the complaint is made in writing by the authorized officer. Next, which type of property is excluded from the provisions of the SARFAESI Act? So the SARFAESI Act talks about the various properties that can be securitized. However, one such property out of the four cannot be taken. They are excluded. So urban residential property, security interest created in agricultural land, commercial office space or personal vehicles. Which of the following are excluded from the provisions under section 31? The correct answer is option B. So the section 31 gives details of the excluded securities where the act is not applicable. These include a lien on any goods, money or security that is given under the Indian Contracts Act or the Sale of Goods Act. Any pledge on movable property. Pledge on movable property cannot be included. Creation of security interest in any vessel defined under the Merchant Shipping Act. Conditional sale, hire purchase where no security interest has been created. Any rights under the Sale of Goods Act or any security interest that is created in agricultural land, amount that is due in less than 20%. So all of these are excluded under the act where the act is not applicable. Clear? So the correct answer is security interest created in agricultural land. Keep in mind all of these things. Question can be asked. Similar type of question will be asked. Which of the following cannot be included or which of the following are there where the act is not applicable? Next, what are the implications of registering a security interest according to section 26E? So if a security interest is registered under section 23, what are its implications? The debts due to the secured creditors have priority over other debts. Revenues payable to the central government are given lower priority. Taxes payable to the state governments are deferred. And the local authority cesses are considered secondary. Which of the following are correct? Are the secured creditors given priority over the central government, or the taxes to the state government are deferred, or the local authority cesses are considered secondary, or they are given lower priority? So the correct answer is option 3, that is A, B and D. The taxes payable to the state government are deferred is incorrect. Section 26D says that it is compulsory for the security interest to be registered for it to be enforced. And Section 26E says that notwithstanding anything contained in any other law, after the registration of the security interest, all the debts due to any secured creditor shall be paid in priority. So if the secured creditor has made a registration, then they will have the priority. The taxes, cesses, and other rates payable to the central and the state government or the local authority. So first priority will be the secured creditor. Then the central government, local authority, state, they are considered what? They are considered on the second priority. They are given a lower priority. Alright, so the correct answer is A, B and D. Next, what does the term appointed day refer to in relation with a tribunal or appellate tribunal? So, according to the various provisions under the tribunal or the debt recovery appellate tribunal, what is the meaning of the appointed day? The date on which the tribunal is established, the date on which the loan is approved, the date on which a case is filed, or the date on which the tribunal issues a judgment. So the appointment date, will it be where the tribunal is created, or where the loan was approved, or where the case was filed with the tribunal, or when the final, after all the proceedings, the tribunal issues a judgment? So the correct answer is option A. The date on which the tribunal is established is the appointed day. Right? We have seen these definitions. The definition of an appellate tribunal: body established for the purpose of preferring an appeal against the order that is passed by the tribunal. Then application, which is made to a tribunal. Appointed day is where the tribunal or the appellate tribunal has been established. Bank will mean a banking company, corresponding new bank under the schedule. Then yes, this is all basic things. So the appointed day of the appellate tribunal will be the date on which the tribunal is established. All right, correct answer is option A. Next, what was included in the 2016 amendment to the section 3 regarding the debt recovery tribunals? So amendment was made in 2016 for the DRTs in the section 3 of it. So which of the following is included? Establishment of such number of DRTs and its benches as necessary, the jurisdiction, powers and authority under the Insolvency and Bankruptcy Code, the requirement for the banks to submit quarterly reports, regulation of foreign investment. So according to the amendment in 2016, which of the following changes were made to the section 3? The correct answer is option D. A and B only. So under the section 3, the government is empowered to establish one or more tribunal, which are known as the DRT. It also empowers the central government to decide and specify the areas where the tribunal is going to work, so the jurisdiction and the power. Then the amendment was made in 2016. The central government shall by notification establish such number of DRT and its benches as it considers necessary. Also the powers, jurisdiction, the adjudicating authority, all of this under the Insolvency and Bankruptcy Code will be mentioned. It does not talk about the requirement for banks to submit quarterly reports or the regulation of foreign investment. So the correct answer is D, only A and B. Next, what procedures must be followed for the appointment and decisions by the DRT according to the Act? Not DRT but DRAT. So for the appointment and the decisions that are made by the Debt Recovery Appellate Tribunal, which or what procedures are to be followed? The appointment of the chairperson by the central government, that is, the chairperson will be appointed by the central government. The notification of government decision has to be made in the official gazette. Then holding public elections. The chairperson is not selected by central government but by public elections and approval by the local authorities. So what procedure must the DRATs follow for the appointment and decision? The correct answer is option D, A and B only. The chairperson will be appointed by the government and the decisions will be officially given in the official gazette. Right? So, one or more appellate tribunals known as DRATs, their establishment power is with the central government. They can exercise their jurisdiction, power, and authority on the such tribunal under the Act. So, under the DRAT, various DRTs will come. The central government also has the power to decide and specify the areas where the tribunal may exercise jurisdiction. Okay, so the correct answer is A and B. A and B. The appellate tribunal consists of only one person called as the chairperson, then they shall be appointed by the central government. Now read this question. Which case held that an application for the execution of the decree of foreign court can be entertained by the DRT? So if a decree of foreign court is made, then they can be entertained by the DRT, which case upheld this decision. The State Bank of India versus John Doe, the Bank of India versus Harshad Rai Odavji Modi, the ICICI Bank versus Jane Smith, the Punjab National Bank versus Richard Joe. In which of the following cases it was held that the foreign court can be, any decree made by the foreign court can be entertained by the DRT? So the correct answer will be option B. That is the famous case of Bank of India versus Harshad Rai Odavji Modi. So wherever a tribunal or the appellate tribunal is established from the appointed day, from where the function was declared, the powers from the bank and the financial institutions, the debts due to them, including the deciding of application, will be made under the IBC. Herein, section 17(1)(b) mentioned that in all districts and headquarters they will be set up. Then in order to invoke the jurisdiction of tribunal in the Bank of India versus Harshabhai Odavi Modi, Bombay High Court has held that the application of execution of decree of foreign court can be entertained by the DRT. Alright, so this is a very famous case, a very important one. The Bombay High Court held that the application of DRT can be made for the foreign court as well. Next, under what conditions can the chairperson recommend action against the presiding officer? So the chairperson that is appointed by the central government, under which condition can they recommend action against the presiding officer? On assessment of performing indicating misbehavior or incapacity based on a complaint from the borrower, on the presiding officer's request, on receiving reports from the media. So, in which of the following circumstances can a complaint be made against the presiding officer? The correct answer is obviously A, on assessment of performance. Rest all the options B, C, and D are quite vague. Why on the complaint of a borrower, or why would the presiding officer themselves request, or reports from the media? These are very vague. So, the correct answer is on the assessment of performance indicating misbehavior or incapacity. Right? So the chairperson may direct the tribunals to furnish at such intervals reports related to the pending cases before the act. Then they may convene meetings of the presiding officers. They can also make an assessment of the performance of the presiding officer and they can make a complaint if the chairman is of the opinion that they are showing misbehavior or incapacity. Alright, so the correct answer is option E. Next question. What happens if the order was made by the tribunal with consent of the parties? So the tribunal, after hearing the proceedings, after all the proceedings, they make a order and it was made by the consent of the parties. Then the appeal cannot be filed. The appeal can still be filed. The appeal must be filed within 10 days. The appeal must be accompanied by a higher fee. So if both the parties have agreed, they have given consent that yes, we are agreeing this decision, then can they make an appeal? So the correct answer is no, the appeal cannot be made because why? Both the parties have given their consent. So any person who is aggrieved by the order, they can make an appeal, but they have to do so within 30 days and it will be accompanied by fee as applicable. On receipt of the appeal, after giving the hearing, after hearing both the parties, if they think fit, either confirming or modifying or setting aside the order that is passed by the tribunal, so the AT can take this decision, and then the appeal filed before the appellate tribunal shall be dealt with as quickly as possible. It should be attempted that finally within 6 months from the date of receipt of the appeal, the DRT takes a decision. Right? However, if the order was made by the tribunal with the consent of the parties, then no appeal shall lie. So the correct answer is option A. Next, what principles guide the tribunal and the appellate tribunal in regulating their own procedure? So, when we are talking about the DRT and the DRAT, when they are taking care of their own procedures, then what principles guide their procedures? The principles of natural justice, the guidelines provided by the Civil Procedure Code 1908, provisions of the Act and rules thereunder, decisions made by the Supreme Court. So, which of the following guiding principles will be kept in mind when they are performing their duties? Whether 1 and 2, 1 and 3, 1, 2 and 4, or 2, 3 and 4. The correct answer is option B, that is 1 and 3 only. Principles of natural justice and the provisions of the acts and rules thereunder are going to guide the tribunal and the DRAT. Alright? So the tribunal and the appellate tribunal are not bound by the procedures that are laid down by the Civil Procedure Code. They're not limited. It further provides that they shall be guided by the principle of natural justice and the provision of the own acts. All this information regarding the act, that for the purpose of discharging their functions, they have the same powers as vested in the civil code under the Code of Civil Procedure, right? Then the tribunal and the appellate tribunal are also deemed to be a civil code for the purposes in the Code of Criminal Procedure. For the purpose of proof, they can ask for entry in the banker's book and it shall apply to all the proceedings before the tribunal or the appellate tribunal. So these are the powers that the DRAT and DRTs have. Next, which actions can the recovery officer take to recover the amount specified in the recovery certificate? We have already answered this question. Taking possession of the property over which the security interest is created, taking possession of any other property, appointing a receiver for such property and selling it, issuing a public notice to the defendant. So the recovery officer has certain powers related to the actions that they can take, and these powers are A, B and C. A, B and C. As per section 25 of the Act, on receipt of the copy of the recovery certificate issued under section 1922, the officer has to proceed to recover the amount that is specified in the certificate. They can either do so by attachment and sale of movable and immovable property, by the arrest of the defendant and his detention in prison, by the appointment of the receiver for the management of the movable and immovable properties, taking possession of the property over which the security interest was created, or any other mode of recovery that is prescribed by the central government. Alright, so the correct answer is option A. Next, what are the consequences for the defendant if they agree to pay the amount specified in the recovery certificate and proceedings are stayed? So if the defendant agrees that they will pay the amount that is specified in the recovery certificate, then what will be the consequences? The defendant forfeits the right to file an appeal against the orders of the tribunal because they have given their consent. The defendant must provide additional collateral. The defendant is granted immunity from further legal action, or the defendant can continue using the secured property. Again, a very direct question, a very simple question. The correct answer is option A, that once they agree, they have to forfeit the right to file an appeal. Right? So the defendant, where they agree to pay the amount, they will forfeit the right to file the appeal against the orders of the tribunal. Now they cannot move a complaint to the DRAT. Right? If the defendant commits any default in the payment, or there's a stay of the recovery proceedings, shall stand withdrawn, and the recovery officer shall take the steps for the recovery. If they have agreed to pay the payment but they are making a default on that, or they are delaying it, then the recovery officer will take the remaining amount of debt due and the payable. They can start the recovery process. All right, so the correct answer is option A. Now they cannot file an appeal in the DRAT. Next, what specific section of the IBC 2016 provides the definition of an insolvency personnel? So the IBC contains the definition of an insolvency personnel. Under which section of the Act this definition is given? Whether it is in the section 3 subsection 19, section 3 subsection 20, section 201 or section 207. Which of the following is correct? So the correct answer is option A. It is given under the section 319. So the primary duty of the insolvency professionals is to assist in the completion of the insolvency resolution, liquidation and bankruptcy proceedings. They are regulated persons who maintain professional standards and code of ethics as the first level regulators. They follow the insolvency professional means that is enrolled under the section 206. Definition is under section 19, and then other sections are there according to their agency, their procedure, and so on. So the correct answer is section 3, subsection 19. All right. Then the definition under section 320 is given of the insolvency professional agency. Any person registered with the board under the section 201. Okay, so the correct answer is option A. Next, what is the minimum amount of default that is required for a creditor to initiate the insolvency resolution process? So what is the minimum default that the creditor has to see, and only then they can initiate the insolvency resolution? Whether it is 1 lakh, 5 lakh, 50 lakh or 1 crore. So this much default has to be made, only then the creditor can initiate the insolvency resolution. The correct answer is option D, 1 crore. Earlier it was 1 lakh. This default has been increased to 1 crore from effect 24th March 2020. And only then can the creditor initiate the insolvency process. This code proposes two independent stages. First is the insolvency resolution process, during which the financial creditors assess whether the debtor's business is viable to continue, rescue and resurrection is possible or not. Second step is liquidation. After their assessment, if the creditors they feel that they cannot be resurrected, the business cannot be made viable again, then they can wind down, they can decide to wind down or distribute the assets of the debtor. All right, these are the two options available, the two stages that are there. And the minimum amount from 2020 has been increased to 1 crore. Next, how long is the initial period during which no CAIRP applications can be filed for the defaults arising on or after 25th March 2020, which is specified in section 10A. Okay. So whether it is 3 months, 6 months, 9 months, or 1 year. The correct answer is option B, that is 6 months. This was after the COVID-19 pandemic that the code was amended and section 10A was inserted to suspend the initiation of the CIRP by all the parties, be it the financial creditor, the operational creditor, or the corporate applicant, any. So, no application for initiation of the corporate insolvency can be made for any default arising after 25th March 2020. This was done to provide protection in the COVID-19 for a period of 6 months or such further period not exceeding 1 year. All right. So the correct answer is 6 months. Next, what documents need to be provided if the committee of creditors decides to replace the interim resolution professional? So if the committee of creditors they decide that they need to replace the interim resolution professional, then which documents they have to be provided? A written consent from the proposed resolution professional, financial audit report from the interim resolution professional, application to the adjudicating authority, or approval from the board. Which of the following documents are required? A and B, B and D, A and C, or C and D? So if they want to replace the interim resolution professional, then the documents that are required are written consent from the proposed resolution professional and application to the adjudicating authority. So where the committee of the creditors resolves under subsection 2, they want to continue the interim resolution professional as resolution professional. It is subject to a written consent from the interim resolution professional in the specified form, and it will be communicated to the interim resolution professional, the corporate debtor, and the adjudicating authority. Or second, to replace, if they want to replace the interim resolution professional, then it shall final application before the adjudicating authority for the appointment of the proposed resolution professional, and this will be with the written consent of the professional. The new professional will give their consent that yes, they are ready to be appointed. So for the replacement, these two documents have to be done: written consent from the proposed resolution professional and application to the adjudicating authority for the replacement. All right. Next, what is the purpose of the pre-packaged insolvency resolution process that was introduced in 2021? So in 2021, the pre-packaged insolvency resolution process was introduced. What was the purpose? To extend the insolvency resolution timeline, to provide a faster resolution process for large corporations, to replace the fast-track insolvency resolution process, or to facilitate the insolvency resolution for MSME corporate debtors. Why was the pre-packaged insolvency resolution process introduced? What was the reason? The correct answer is option D, to facilitate the insolvency resolution for MSME corporate debtors. All right, for the MSME. So this is over and above the fast track insolvency resolution process, which is already in existence. Apart from that, it is not to replace, but in addition to the fast track insolvency resolution process. Then the code is provided for a fast track insolvency resolution process in respect of the following corporate debtors. The fast track is provided for a corporate debtor where it is notified by the central government, the income below. Then the corporate debtor, which has the class of creditors, again notified by the central government, okay, or any other category. Apart from that, for the insolvency resolution of MSME corporate debtors, the pre-packaged insolvency resolution process was passed in 2021. So particularly for the MSME debtors. Next, what are the requirements for the certification of the printout by the principal accountant or the manager? So, the principal accountant or the manager, for the printout for the certification, what all requirements are there? It must state that it is a printout of the entry. It must include an audit report. It must contain a detailed description of the bank's transactions. It must be signed by the CEO. So if a printout is provided of the certification by the principal accountant or the manager of the entity, then it requires that it must state it is a printout of the entry. It must state that it is a printout. When the books of the banks are not handwritten and the copies are taken by the way of printout, then it should have a certificate by the principal accountant or the manager that it is a printout or copy of such a printout. Then the certificate by a person in charge of the computer system. Safeguards have to be appointed. The safeguards to prevent and detect unauthorized change of data. If data is transferred from the system through floppies, disk, tapes, then it has to be seen it is done in the eligible manner, viable manner. All right. It should not include an audit report or detailed description, or it is not necessarily to be signed by the CEO. However, it should be mentioned that it is a copy or printout of the certificate. It is not the original. It is a copy. Next, what did the court emphasize in the ICICI Bank versus Kapil Dev Sharma case regarding the original documents? So again, a very important popular case, the ICICI Bank Limited versus Kapil Dev Sharma case. Which of the following statements are correct? The original documents should always be produced. Insistence on original documents causes delays in adjudication. The original documents are required only when it is disputed. Certified copies are generally not acceptable. So, what were the decisions taken by the court in this particular case regarding the certificates or the documents? So, the correct answer will be B and C. Yes, option second, that is B and C. So according to section 5 of the act, any proceeding where the bank is not a party, no officer of the bank shall be compelled to produce any banker's book contents which can be proved. Similarly, no officer of the bank shall be called as witness to prove in the matter's transaction or accounts. Even where a bank has itself filed a suit, then the original documents need not be produced unless the documents are disputed. So it is not a compulsion that the bank has to provide the original documents. They can provide a copy, right? They can provide a copy. And the original documents are required only when the disputed cases are there. So B and C. B and, sorry, not B and D, but B and C. Next, which is which of the following disputes are outside the purview of the Lok Adalat? So Lok Adalat is another method for dispute resolution, for debt recovery, we can say, for various cases. So which of the following cannot be presided over by the Lok Adalats? Civil disputes up to rupees 20 lakhs, criminal cases, compoundable offences under any law, or all of the above. So A, B, C or D. Which of the following are correct regarding the Lok Adalats? So the correct answer is that compoundable offences under any law are not in the purview of the Lok Adalat. So option C is correct. The jurisdiction of the Lok Adalats is provided in section 19(5), according to which the Lok Adalat shall have jurisdiction to determine and arrive at a compromise or settlement between the parties. So where the dispute is such that where a compromise or settlement can be reached, then the Lok Sabha can take decisions. Sorry, the Lok Adalats can take decisions. The dispute, however, should not be either a pending case before any court for which the Lok Adalat is organized, or a matter which is falling outside the jurisdiction. So the offences which are compoundable under any law cannot be brought within the purview of the Lok Adalat. Other than that, all the civil disputes can be settled presently of rupees 20 lakh. So the correct answer is option C. Next, what steps are taken if no settlement is reached in the Lok Adalat? So if a court case is pending in the court and no decision is can be taken in the Lok Adalat, then what step can be taken? The records of the case are returned to the referring court. The case is dismissed permanently. The court proceeds with the matter from where it left off, or the Lok Adalat imposes a verdict. So, if the court finds that a case is pending and it is under the purview of the Lok Adalat, they can refer it to the Lok Adalat. But if the Lok Adalat cannot reach a settlement, a compromise cannot be reached between the two parties, then what can they do? They can either the records of the case are returned to the referring court, or the court proceeds with the matter from the same where it is left. Alright? So the Lok Adalat will try to arrive at a compromise or settlement by the principles of justice, equity, fair play. If, however, no compromise is arrived, then it will be returned to the court, and the court will start from where it left. It will not start from the beginning. Alright? So the correct answer is option 4, A and C. Next, which authority was added to the powers of the Lok Adalats with effect from 11 June 2022? Sorry, 2002. So from 2002, a new authority was added to the powers of the Lok Adalat, whether it was the Permanent Lok Adalat, Supreme Lok Adalat, National Lok Adalat, or District Lok Adalats. Earlier, the Lok Adalats were established as per the need in the districts on a temporary basis, but for providing fast track resolution, the permanent Lok Adalats are now being established. So the permanent Lok Adalat, for the purpose of holding any determination under this act, they will have the same powers that are vested in the civil court. So what all powers do they have? The summoning and enforcing the attendance of any witness, discovery and production of any document, reception of evidence or affidavits, the requisitioning of any public record or any such matter that may be prescribed. So, permanent Lok Adalats are now added to the powers of the Lok Adalat. They can be established. Which of the following terms would make a contract unfair as per section 246? So, when a contract is prepared, there are certain terms and conditions for its legality. Under section 2 subsection 46, it is mentioned that certain condition can arise where the contract will be termed as unfair. So which of the following is that? Option A says imposing unreasonable charges or obligations on the consumer. B, offering discounts for early payment. C, providing warranties for the products. Or D, allowing the customers to opt out of the contract without penalty. So in one of these cases, it would make a contract unfair under section 2 of the contract. And this condition is when imposing unreasonable charges or obligations on the consumer. So what is the meaning of an unfair contract? It means a contract between the manufacturer or the trader or the service provider on the one hand, and the consumer will be on the other hand. So if any terms cause significant change in the rights of the consumer, like requiring excessive security deposits or imposing a penalty for the breach of the contract, refusing to accept early payment, or trying to terminate the contract unilaterally without the consent of the consumer, all of these will be termed as unfair. It will make the contract unfair. Thus, unfair contract we can say would be one that tries to curtail the rights that would be normally given available to all the consumers. So if a contract curtails the rights, take away the rights from the consumer, then it will be an unfair contract. Okay, clear? All right. Moving on. The next question says, what procedures must the Central Consumer Protection Council follow for its meeting? So the Central Consumer Protection Council is set up for the protection of consumer rights and other issues. So what procedure must they follow when they are conducting the meetings? The council must meet at least once a year. Meetings can be held only in the capital city. The time and place of the meetings are decided by the chairperson, and the meetings must be held at least every month. So option A and option D are completely opposite. Option A says that they should meet at least once a year, and D says they must be held every month. So we can strike out the option where both are given together. We can use the elimination method. So the correct answer will be option B, that says 1 and 3 only. 1 and 3 only. That the meeting should be held at least once a year. It is not required to be held every month. Once a year is stated, and the time and place will be decided by the chairperson, not always in the capital city, as decided by the chairperson. So the central government may notify from time to time where the Central Consumer Protection Council has to be set up. It will consist of members like the ministry in charge of the Department of Consumer Affairs, any member who are official or unofficial that are prescribed, who have expertise in the particular field. The time and place of the meeting shall be conveyed by the chairperson. Okay? And basically, the object of the council would be to render advice on the promotion and protection of the consumer rights under the scheme. So the correct answer is 1 and 3. That is option B. Next, what are the components of each state commission? Okay, so if a state commission for the consumer protection is set up, then what are the components? A president, a secretary, a treasurer, and not less than 4 members. Which of the following will be included as the member of the state commission? The correct answer is option B, that is president, and apart from that, members not less than 4. So the State Consumer Disputes Redressal Commission is established as per the section 42 of the Consumer Protection Act 2019. Herein under section 42 subsection 1, the state government will establish this commission for the consumers dispute and redressal, grievance redressal. Each state commission will consist of the president and not less than 4 or not more than such number of members as may be prescribed in consultation by the state government. So the correct answer is A and D. Secretary or treasurer are not given compulsorily to be the members of the state commission. The president and not less than 4 members are given. Next, what is the jurisdiction limit for the district commission to entertain complaints? So now we have seen the central commission, state commission. We also have the district commission. What is the jurisdiction limit? For the complaints exceeding 50 lakhs rupees, where they do not exceed 50 lakhs rupees, if they exceed 2 crore rupees, or they do not exceed 2 crore rupees. So, which cases can be undertaken by the district commission to entertain the complaints of the consumer? So, this is given under the subsection 1 of the section 34 of the Act, that the cases should not exceed 50 lakh rupees. So, the complaint does not exceed 50 lakh rupees. Right? Then State Commission, what is the jurisdiction of the State Commission? Where the complaints of value of goods exceeds 50 lakh but not more than 2 lakh. So district, we will write this down as less than 50 lakh. For the state, jurisdiction is between 50 lakh to 2 crore. And for the Central National Commission, exceeding 2 lakhs. Exceeding or more than 2 lakhs. All right, for the consumer grievance redressal. Next, which of the following is included in the definition of applicant as per the section 2A of the Limitation Act of 1963, a very important act, Limitation Act. So as per the section 2A of the Limitation Act, which of the following is okay, so some important definitions that are given in the section 2 of the Limitation Act are related to the applicant or the plaintiff, then what is the period of limitation. All of these things are given, and the applicant definition includes petitioner the petitioner, any person from whom or through whom an applicant derives his right to apply, any person whose estate is represented by the applicant as the executor, administrator, or the representative. Then the definition of defendant, any person from whom the defendant derives the liability to be sued, or any person whose estate is represented by the defendant. Then we have the definition of plaintiff. Plaintiff will be the person from or through whom the plaintiff derives the right to sue. Right? So we have the three things: applicant, defendant, and the plaintiff. Under the definition of applicant, the petitioner is mentioned. The petitioner. Next, what time is excluded when computing the period of limitation for filing a revision of review application? So there is a certain limit, period of limitation. What is this time period, or which time is excluded from this limitation period? The time taken for obtaining a copy of the order of the award, the time taken for the initial filing of the case, the time taken by the court to hear the appeal, or the time taken for the appellate court to respond. So the entities for the limitation under the period of limitation, which time period is excluded? The correct answer is A. The time that is taken for obtaining a copy of the order or the award is excluded from the period of limitation. So when the period of limitation expires on the day when the court is closed, the suit, appeal, or application may be instituted, preferred, or made on the date when the court reopens. An appeal or any application other than the execution petitions may be admitted after the prescribed period if sufficient cause is provided for not preferring. When we are computing the period of limitation, then the day from which such period is to be reckoned shall be excluded. It shall also exclude the date on which the judgment was pronounced and the time taken for obtaining a copy of the decree, sentence, or order that was appealed. Alright, so the requiring for obtaining a copy or the order, the time that is taken for that will be excluded. So the correct answer is option A. Then, what does the previous year mean according to section 3 of the Income Tax Act? We have various terminologies in the Income Tax Act. We have the assessment year, we have the previous year. So, previous year, what is the meaning of the previous year? A, the financial year immediately following the assessment year, or the financial year immediately preceding the assessment year, the calendar year immediately preceding the assessment year, or the calendar year immediately following the assessment year. Which of the following is characterized as the previous year in the Income Tax Act? It came into force from April 1st, 1962, extends to the whole of India. All of these things we already know. On the basis of the residence, on the place of source of income. So herein the assessment year and the previous year is given, and the definition of previous year is the financial year that is immediately preceding the assessment year. So it represents the period of 12 months beginning from 1st April every year. This is the assessment year, and preceding year will be the immediate 12 months before that. Alright, so if the assessment year is 2024, Then we will call the previous year from April to April 2023 to 2024. Like this, we will term the previous year. All right. So means the financial year immediately preceding the assessment year. Okay, so the correct answer is B. What is true about the income declared by the resident assessees in India? So the resident assessees, they have to declare their income and then the Income Tax Act applies. So which of the following will be true? It includes the income from anywhere in the world. It includes the income only earned in India. It is taxed only if the income is earned within India. It is taxable under the income tax in India. So the income that is declared by the resident assessees in India regarding their income, it will include the income if they are earning it from anywhere in the India, and this income will be taxable in the Income Tax Act. It will not include only earned in India, or it will not include if it is only taxed in India. If it is included in the Income Tax Act and if it is earned from anywhere in the world, it will be included in the declaration. All right. So the residential status of an SSC will be determined on the basis of number of days they were present in India. In case of corporates, the basis of location and control, also the place of registration. If there is also a third category, that is a resident, not ordinary resident, then the income declared by the resident assessee will include the income that is earned from anywhere in the world. Any income derived from abroad is not taxable, and only income occurring from arising in India is liable to be taxed in India. All right. So this is the case of non-resident. If we are talking about the income resident of the resident assessees, then it will be included. Next question. What concept does advance tax arise from? So advance tax is a type of tax, and it arises from which concept? Whether it arises from the tax deferral, the pay as you earn, lump sum payment, or the postponed payment. The advance tax concept. So here the correct answer will be option B. That is pay as you earn, because it is talking about the advance tax. You will pay as you earn. So the advance tax is payable under the provisions of the section 210. Advance tax arises from the concept of pay as you earn, that is in installments. So in the case of corporate assessees, the advance tax is paid in 4 installments, that is from June 15, 15%, September 15 to 45% will be paid, December 15 to 35% will be paid, and by March 15, 100% will be paid. So they need not pay the whole tax as a whole. They need not pay the complete tax as a lump sum. In the installments, they will pay it. By June, they have to pay 15th. By 15th of every month, like from June, 15% has to be paid. Then 15th September, they need to pay 45%. By 15th December, they need to make 75%. And by 15th March, they need to make 100%. So as the corporate is making profit, as they're earning their income, they are making the payment of tax. Next, when is it mandatory to code the PAN for the fixed deposits or the time deposits in a bank? Permanent account number has to be mandatorily quoted in which case? For the fixed deposit or the time deposit? When the deposit amount exceeds rupees 10,000, or when the deposit amount exceeds 25,000, 50,000, or 1 crore. In which of the following cases the PAN has to be quoted? In the fixed deposit or time deposit? The correct answer is option C, that when the deposit amount exceeds rupees 50,000. Right? Apart from that, opening of bank account also requires a PAN. If minor is opening the account and they're having no taxable income, then they shall quote the PAN of their guardian. their father, mother, or guardian. If the parent or the guardian does not have a PAN, then the declaration in Form 6C has to be filed. So only in the case of fixed or time deposit, when the deposit exceeds 50,000, the PAN has to be provided. What actions must be taken by the recognized stock exchange if the tax was not collected during the calendar month? So there are certain powers, there are certain responsibilities with the stock exchange in the case the tax was not collected during the calendar year. Then they can pay the tax to the central government by the seventh day of the next month. They can inform the seller to pay the tax directly. They can file a declaration of non-collection to the central government, or they may remain liable to pay the tax themselves. So here we are talking about the commodity transaction tax. So section 119 talks about this, that what action will be taken by the recognized stock exchange, and the correct answer is option 3, that is B and C. B and C. The law makes the recognized stock exchange dealing in the commodity trading responsible for the collection of the commodities transaction tax from the seller. Right? The commodities transaction tax collected during any calendar month in accordance with the provision shall be paid by every assessee to the credit of the central government by the seventh day of the month immediately following the set of the said calendar month. All right? And the assessee who fails to collect the tax, then they shall be liable to pay the tax to the credit of the central government in accordance with the provision. So the provision is that they have to inform the seller to pay the tax directly, and they need to file a declaration on non-collection. The recognized stock exchange will not make the payment on behalf of the assessee or the corporate. All right, they will only inform the seller to pay the tax, and they will file a declaration. Next question from the GST. What happens if the tax on import of services was paid in full under the existing law before 1st July 2017? So before 2017, under the law, what would happen, or what happened if the tax on import was paid in full? No additional tax shall be payable under the IGST. A refund must be claimed for the tax paid. The import of services will still be liable to the integrated tax, or the import of services will not be liable. So here we can see option C and D are completely opposite of each other. So we will remove the options where both of these are together. Then if the tax is paid in full, what will be done? No additional tax shall be payable under the IGST, and the import of services will not be liable to the integrated tax. So the correct answer is option 4, A and D. So the import of services has been defined under the IGST, and it refers to the supply of any service where the supplier is located outside of India. So we are talking about imports. Under the provisions of the CGST Act, import of services for a consideration not in course of further business shall be considered as a supply. An import of the services without consideration shall not be considered as a supply. Right? And we have already seen that if the payment of the tax is been made in full, then no further tax shall be payable on such import under the IGST. And that is all for today. So if you go through your notes, you will see that we have completed all of these topics, not just the questions. If you go through these explanations that we have provided here, it will be more than enough for your revision. But it is important for you to go through them. So make sure that you download the PDF, you take out time of 1 hour or half an hour, whatever it takes you to revise the complete module C using these questions. That you will do in the morning. Okay, tonight you have already spent a lot of time on studying. You can take rest now, wake up tomorrow before you leave for office. Make sure to revise it, go through all of this, and that will be done. You will remember each and every detail when you are appearing for the exam. I hope these questions are helpful. If you do find them helpful and you find them interesting, or if you have any doubts or query related to any question or any topic, you can let me know in the comment section. I will see you tomorrow, same time, 9 p.m., with the questions from Module D. We will cover the Module D in tomorrow's marathon session. Till then, take rest, keep revising, keep giving your 100%, and thank you for attending the session.